Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be discussing an effective indicator. It is called the Fractal Adaptive Moving Average. Okay, so this indicator is a custom indicator, meaning that you would have to download it from a reputable site online. I have already downloaded the indicator, so I'm just going to be loading it on the chart right now. Meanwhile, after downloading the indicator from any reputable site online, you will have to add the indicator to your indicators folder on your MetaTrader terminal. That is, if you are using the MetaTrader platform, whether the MetaTrader 4 or the MetaTrader 5. All right, and then after doing that, you will have to restart your terminal, and then you will go to indicators, you go to custom, and then you add on the Fractal Adaptive Moving Average. So this is how the indicator looks like. Okay, the indicator is like moving average. Okay, basically it works with the principle of moving averages. All right, however, this is a modified version. All right, as we can see, this looks exactly like moving averages. Okay, it is a modified version of the exponential moving average that adapts based on the current fractal dimension of price movements. Okay, so that is the reason why it is called the Fractal Adaptive Moving Average, for short, FRAMA. All right, I'm just going to be writing it here. Fractal Adaptive Moving Average. All right, for short, it is called FRAMA. Okay, now this indicator actually excels at following strong trends. So you can use this indicator to identify the direction of a trend, just like other moving averages. Okay, when you have the indicator trading, when you have the price trading below the indicator, it shows that it is a sell trend. That is when the indicator is above the candlesticks. It shows that it is a sell trend, right? When the indicator is actually trending downwards, not just being above the candlesticks alone, but when the indicator is trending downwards with price bouncing off below the moving average, it shows that it is a sell trend. All right, on the other hand, when you have the indicator trending upwards beneath the candlesticks, it shows that it is a buy trend. All right, so whether you are trading Forex or trading stocks or trading crypto, this indicator, the FRAMA, it can help you identify clean entry points while filtering out market noise. All right, this is perfect for traders seeking an adaptive edge in their technical analysis toolbox. Okay, now when you are using this indicator, all you have to do is watch out for crossovers. Okay, the indicator gives signals by crossovers. So when you have the red line, when you have the red moving average cross below the blue moving average, you automatically have a sell signal. Now let us just briefly go to the inputs. The inputs for the indicator, we can see that the indicator has an hour period of 16, a multiplier of 4.6, and a signal multiplier of 2.5. Now, these are the default settings, right? But you can decide to modify these according to your taste, okay, depending on your strategy. But I don't think it is necessary, all right? I don't think it is necessary to modify this. But if you are maybe a swing trader or a scalper and you just want to, tweak the settings a bit to suit your own trading style, or even an intraday trader, then you can go ahead, right? But the default settings actually works well, all right? The default settings work well. So when you have the red line crossed below the blue line, you have a sell signal. So you can enter a sell after you have confirmed that signal. You can enter a sell right below the moving average, set your stop loss above the swing high, and then for your take profit, you can decide to use the nearest support zone, or you can wait for the moving average to give you a buy signal and you use that to exit your sell trade. if you were looking for a buy signal, it is when the red line crosses above the blue line. Okay, that is when you have a buy signal. So you can use that to exit your sell trade. Then in the case of a buy trade, when you have a bullish crossover, when you have the red line cross above the blue line, that is a buy signal. Okay, after getting that signal, you can enter a buy trade and then set your stop loss just below the swing low, and then you can actually target the nearest resistance for your take profits, or you can wait for when the red line crosses below the blue line and you use that as your exit strategy for your buy trade. Okay, now it is also important that you combine other indicators for additional confirmation. In as much as the Fractal Adaptive Moving Average is effective, okay, it does not guarantee profit. It is not foolproof. So when you use other indicators to confirm signals, it adds a layer of confidence. Yes, it adds a layer of confidence in your trades. So for that purpose, let us just add the stochastic oscillator. You can actually use any other indicator of your choice, all right, to confirm signals. But we're just going to be adding the stochastic oscillator just to look at a few examples, all right? And then in addition to that, make sure you use horizontal support and resistance levels, just like you can see I did here. I plotted out a support and resistance level that will help identify potential reversal points. Okay, so you can use your support and resistance levels for your exit signals as well. Now, when we are using stochastics for confirmation, all you just have to do is watch out for the crossovers and the direction of the stochastics line. So when we had a buy signal here, we can see that around this point, when we had that buy signal, the stochastic was in overbought territory. That would have meant we should have waited. That means we should have waited. Okay, we should have waited. Now, we had just shortly afterwards the red line crossed below the blue line. So this shows that this move was just a weak move. It was a weak move. So there was not much bullish momentum. And as a result, the stochastic had to tell us that we should wait because it was in overbought territory already. Now, shortly afterwards, we had the price pullback, and this trend line confirmed that the pullback had ended around here, right? And then the stochastic entered close to the oversold territory, and we had a bullish crossover, and then eventually we had the red line cross above the blue line again. So we should have entered somewhere around here. Okay, somewhere around here. At this point, the stochastics were already midway, around the middle point, pointing upwards. That was a buy confirmation. And in addition, we had a bullish candle, right? So we would have entered a buy around here. Okay, and then for our sell, we can actually decide to use the Fractal Adaptive Moving Average for our sell signal, or the resistance level for our sell signal. Okay, one of the reasons why I will not exactly recommend using the stochastics to determine your exit is because in a strong trending market, you might get false signals from the stochastics, because when the market is trending strongly, you might have the stochastic oscillator be in the overbought or oversold territory for a long time. Yes, so in this situation now, you might find the stochastic in overbought territory, but the trend is still ongoing. And you can see just a little pullback resulted in this move, and then it entered overbought again, and you can see the trend was still ongoing. And even at this point, we had the stochastic coming down, and it entered the overbought again. So when you are in a trending market, I will not recommend using the stochastic for your exit. Instead, use the Fractal Adaptive Moving Average or your resistance levels for your exit. Okay, so that is it for this indicator. The indicator is quite easy to use. The Fractal Adaptive Moving Average, just like the way the normal moving averages work. When you have a bullish crossover, that is a buy signal. When you have a bearish crossover, that is a sell signal. Okay, and then when you have the indicator trending upwards beneath the candle, it shows a buy trend. When you have the indicator trending downwards above the candle, it shows a sell trend. And remember that this indicator also acts as a dynamic support and resistance levels. That's the reason why you can see price bouncing off the indicator, as the indicator was serving as a dynamic resistance in the sell trend. And you can see price bouncing off the moving in the indicator, in the upward direction, because it was serving as a dynamic support in a buy trend. So that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. Until next time, trade profitably. I'll see you in the next video.